Yo, what is going on, guys? It's your boy Thejosechuy and welcome back to my channel. So in today's video we're going to be taking a look at my portfolio and as well as looking at why I sold the SPHD. Also, if you want 3 free stocks, make sure you go and check out Webull because right now they're having a special where you get 1 extra stock instead of just having 2. And honestly that's free money, so make sure you go and check that out so that way you can get 3 free stocks. And before we begin, don't forget to smash the like button, comment down below what's your favorite stock, and alright guys, let's get started. So honestly it was extremely hard to get rid of SPHD because it's a monthly paying dividend stock, which is what I want. But there's so many like negatives that I saw in the SPHD and as well as the company SDiv, and they get like high dividend yields, but their growth over time is actually not even like going up that much. Like within the past 5 years, SPHD has gone down 5%, and then this one was like minus 80%. And I'm like, what's the point of having dividends if they're not even going up? Alright, so that's the first thing wrong with them. And then the second thing is they're not like the companies that they're investing in are in like dying industries, which is not what I want. The things that I want are like more like tech related because tech is the future and like that's where we're heading towards, and that's what they should be going towards too. So instead of going with those 2 ETFs, I decided to just put more money into these ETFs because these ones are actually growing. They're doing amazing things like QQQ, VTI, and VOO have honestly outperformed them by at least 2 or 3 times. Alright guys, so what we're going to do is we're going to compare SPHD and the S&P 500 over the past 5 years. So over the past 5 years, SPHD will give you a return of 10.61, and then the S&P 500 will give you a return of 84.84%, which is 8.4 times bigger than SPHD. Alright guys, so now we're going to pretend like it's 5 years ago and we decided to invest $10,000 starting with SPHD, and then we're going to contribute $600 every single month, and we're going to get a rate of return of 5.6%, and that's going to be in 10 years. So that would be $113,000 right now if you decided to invest that 5 years ago. Now we're going to check out the same example but with the S&P 500, and the numbers are going to be plugged in for those. Alright guys, so now looking back at this example, so this time we did a rate of return of 10%. Usually with dividends and everything reinvested, it'll be a little bit more than 10%, but I decided to do 10% flat to make things easier. So your investment would be worth 149, close to $150,000, which is going to be 25K more than SPHD. And now that's actually a lot of money that you can actually like retire with, and you can do more with because you decided to not go with the high dividend yield and go for the low dividend yield, but this one has a ton of growth. So this is important because I was chasing the yield for a long time for SPHD and some of like the other companies that have. So this is important because I've been chasing high dividend yields for a long time, and then I just started to notice more of the growth stocks because the tech stocks have been like blowing up. I've been chasing high dividend yields, and what I've noticed is it's a little bit to like go both ways with growth and value stocks that give you dividends. So I found it better to just stick with like having some of SPHD and some of the VOO. Alright guys, that about does it with this video. Make sure you go and get your 3 free stocks from Webull. There's 3 different opportunities to get something big. Also, don't forget to like, subscribe, and thank you guys so much for watching.